Good afternoon, everybody. Welcome to the TraderMerlin Show for your Tuesday afternoon. I am no longer looking like a tomato, although I will tell you this, I am colorblind, so I can't tell whether my color is perfect. I'm hoping I can get one of my buddies over here who's into photography to help me get all the colors right. But at least I don't look like a bleached or a horrible deformed tomato or Dr. Death or something from yesterday's show. So thanks, everybody, for joining us and dealing with my imperfections on yesterday's show. Today, we are going to talk about multiple time frame analysis. I'm going to also talk about kind of broader markets. Later on in the show, you guys might remember yesterday I was talking about the possibility of going long on Tesla today based off of the split coming up here in a couple of weeks or a few weeks, and I thought, you know what, I might jump on that one. I did today, so I'll walk you through kind of what I did on the Tesla option trade. I bought some call options on Tesla, which by the end of the day, I already put myself into a nice game, but I think it got so much bigger upside potential. So we'll talk more about that as we progress, but we need to get to the topic du jour because I hate making guests wait. Today we're going to talk about multiple time frame analysis. We've had him on the program several times in the past. Of course, you guys know Mr. Jerry Baldwin's joining us today. Jerry, how you doing, my friend?
Merlin, I'm awesome, man. I'm so happy to be with you. Thank you for having me. Things are awesome, and how are you doing?
I'm great, man. I'm great. You know, I can't complain. Other than the heat, you might notice there's a little whirl over here. I have a fan literally blasting me during the show today because it's so hot out here in Southern California. So all in all is good for me. You know, trading and life is just fantastic. I'm on the right side of the dirt. I got no complaints.
You were tough on yourself earlier. I don't think you look like a tomato. I'm sure you look fine, but you were tough on yourself.
You missed it yesterday. I moved my studio around, so when I did that, the camera readjusted somehow, and it was like a blood red zit on the top. My entire head was just a giant red zit. It was awful. But we look a little bit better today, I think. So my fans or my viewers were pointing it out. They were making fun of me all day, which is great. I appreciate it. So.
Oh, I'm sure. And it's funny to talk about the weather because we're having a Southern California day today, which has been like perfect. It's like upper 70s and there's no humidity. And it's gorgeous, and you're having a Chicago day, it sounds like, out there. What are you guys doing, 80, 90 in humidity?
Yeah, it's hot. It's definitely really, really muggy.
Really? Okay. Well, it's great to be here, Merlin. I'm so happy to be here, so thanks again for having me, and I'm looking forward to a great show. I've got a lot of great things going on. I'm excited to share. You have such a great audience you have for so many years, and I'm always grateful to be here. So I'm excited to get started. We're going to have some fun today.
Let's get started. Obviously, the topic du jour, the piece was multiple time frame analysis, and we all have different perspectives on it. I actually had a listener question, which I'm going to get to here. I'll read it because I think it kind of sets the stage for this. Where was it? It says, how do you use different charts like the daily time frame, daily, hourly, etc. in your daily trading? Do you need to look at 2 charts, 3 charts, 10 charts? What's the benefit of it? And that was from Carl, which I think kind of ties into your comments that you and I were discussing, talking about multiple time frames. So walk me through your usage, what you think about it, how you utilize multiple time frames.
Absolutely, Merlin. Yeah, so for me, it's when I started seeing my trading go to another level, it is when I started incorporating multiple time frame analysis. And the analogy that I use in my trading room and with my students is that, you know, if like, for example, if you're trading, you know, I know you trade a little bit bigger time frames, 5, even 15. So, you know, for example, if you're trading a 15-minute time frame and you're seeing bullish indicators, you know, you're going long. If someone else who might be day trading might be using a 30, they're seeing bearish indicators, you know, they're going short. So that conflict right there in the market causes the market oftentimes to go sideways, you know, and it causes too much conflict. But when you align the multiple time frames to now where you, Merlin, are on a 15 and you're going long, and I'm on a 5 and I'm going long because I'm seeing bullish indicators on my chart, you know, and Carl, for example, is going long on the 30 because he's seeing bullish there. All of a sudden, now the markets are moving. You know, they're moving in one direction. The trend is clearly identified, and now all of a sudden you can time in on some of those smaller 1, 3, 5, 15-minute time frames and have the probabilities that much greater in your favor because you've got other traders, other participants, and the larger time frame trend of the market in your direction. So it's super important to me. That's how I look at it. That's the analogy I use. You know what, Merlin? If I could, can I show my screen real quick?
Yeah, go for it. I'm trying to fix. I have an audio issue over here for some reason, but share your screen and I will. I'll bring it up.
All right, so it's saying host disabled participant screen sharing.
It always happens that way. You know, I'm not exactly sure why it does that, but let me see. I should be able to. Give me just a second, so I'll allow screen sharing. It happens every time. There you go, Jerry. You got it now.
You're the best. You're the best. Yeah, a picture is worth so many words, and that's why, you know, rather than people just listening to me, I want them to see what I'm talking about. Because here's and let me actually pull this up. So you guys should see my chart as we speak. But what I want to show you more importantly, at least for this, the answer to this, what we're doing here is this. This is my radar screen, and I custom built this thing, and I had some help. I had some students help me when we first got started doing this, and it's absolutely amazing. But I'm going to share exactly, what time frames I look at for my intraday training. So hopefully this will benefit Carl. This will benefit anyone else who's looking at doing this. But and I know it looks like a lot at first. This is a live piece. It's closed right now because the market just closed at 4 o'clock Central, 2 Pacific. But if you look here, I've got symbols on the left, and I guess what I want to get at is here's the time frames that I focus most of my energy. And you can see I've got a 60, a 30, a 15. Then I go down to the 1 and the 5. So the 15, 30, and 60 with regard to multiple time frame analysis, those are 3 of the ones that I want to be in alignment, I say. And I've got a number of different indicators up here. I've got the slow stochastic, I've got the RSI. Those are 2 of the ones that I use. 2 of the ones that I prioritize. But when things are all bullish, again, it makes it that much higher probability to enter in on a smaller time frame. If things are all bearish, it makes it that much easier again to take a short on a smaller time frame, and you just have that much more in your favor. When I do this room in the morning, and we've got things in line, man, that market is just moving. And I've got an example of that later in the show I want to show everybody, but it was off of crude, and it's funny that we're talking about this, Merlin, because early this morning, the crude market opens at 8 a.m. Central, and the pit session, and first actually couple hours of the day, we had mixed signals. I had mixed on the multiple time frames. I had mixed signals. In other words, I had bullishness on RSI, bearishness on stochastic, and it was causing the market to go sideways. And all of a sudden, about 10:30 Central Time, things started to align. They aligned to the short side in a beautiful way, and then it's just a matter of identifying the origin of the move for that smaller time frame. And like I said, I'll share that trade later on. But that whole trade is premised on the fact that now I'm going in alignment with the larger time frame trend, and I go as high as the 60. Realistically now, I've been going up to a daily. I don't require the daily to be in line with me, but it never hurts, and that's how I word it to my students. 60, 30, and 15 are in line. In other words, everything's pointing one way unanimously. I'm good to go, but it's only going to help if you have that daily time frame, in the same line. In other words, the indicators pointing whether all bearish or all bearish. So I'm sorry, all bullish or all bearish. So pretty lengthy answer, Merlin, but again, I want people to be able to at least see kind of what I look at, and I don't mind sharing a couple of the time frames that I actually do use. And but this is what I look at with regard to the multiple time frame analysis, and why I do it. It's just because I see the markets move, when those things are in line.
So I got 2 questions for you. One is, how long did it take for you to A, understand that this multiple time frame analysis was critical, and B, identifying which time frames were needed for your style? You are predominantly an intraday guy, maybe a couple day swings, but it sounds like mainly intraday. So, you're obviously going to use a much different set than somebody like, Bob Dunn. And Bob Dunn Bob will say you're an idiot if you use a 5-minute chart or a 15 or an hourly. And I totally disagree with that. I think that that's just a different perspective of trading. And we all have to identify our niche, our need, and what works for us. So how long did it take you to realize the importance of multiple time frames? And then what did you do to discover the time frames that work best for you?
Yeah, it's a great question, Merlin. I started out like many people just trading the one time frame and had mixed results. You'd take a 1, a 5, 15, whatever it was, and it would work often, but not often enough. And it took me years, to be honest with you. It took me a long time to understand. And again, I continue, and to this day I continue, and I know you do as well. That's what makes us, where we are, is that we never stop learning. So I'm always pursuing knowledge, and so I pursued knowledge for a long time and realized what I was doing was good, but it wasn't as good as it could be. So I don't remember exactly where it was I came across, the definitions or the explanations of multiple time frame analysis. So I started to kind of study that, got some schooling on it, and then looked at some of the more popular, I don't know popular, but some of the more common time frames people would look at to establish trend, and then a little bit of trial and error on my end. I grabbed them. Normally it's only like 2 or 3 time frames. I learned from one place, they were using 4.
Yeah.
So I'm like, it never hurts. So it's hard for me I can't pinpoint it, Merlin, as far as, but let's put it this way. It took me a long time to be able to get it and then kind of find exactly what works for me. Now, that being said, you and I have been doing this a long time, and when we first started, we didn't have the resources available to us like we have now. I mean, you and I, between what you offer on your show, what I'm able to offer, in my day trading room and my coaching, we're able to offer students now who are coming into the game so much more than you and I had access to when we first started. So I think the learning curve's accelerated now, but realistically, it took me a long time to get it.
Yeah, absolutely. And the learning curve is a long one. And unfortunately, you've seen it over the years, having taught for many different companies, that a lot of times a student will come in and expect, I'm going to take, one class, and in 3 days, I'm going to learn how to beat Goldman Sachs at their own game. And it's like, come on, man. That's like telling me you're going to race, Michael Schumacher in the Indianapolis 500 with 1 day of driving experience. It's probably not going to happen. These things take time. Let me go to another question here. Obviously, I love your setup here. I like that you have the 1, the 5, the 15, the 30, the 60. And you guys notice that those are all, the sub-dailies. Those are under the overall umbrella of daily time frames. What I find interesting about that is you mentioned, when they all line up. One thing I've noticed is that they rarely all line up. At least maybe with the 60 and under they will, but if I threw the daily on here, you're very rarely going to have the daily, the 60, the 30, the 15, the 5, and the 1 all trending up or down, right? There's going to be some change there. And I guess my question would be, how are you utilizing those different time frames, and do some of them become anticipatory, like, hey, I'm using this to anticipate maybe the trend changing at this point? Because, like I say, they don't all line up.
Right. Yeah, I love that, Merlin. That's an awesome question. So, you answered it actually in the question, is that if you're looking at swing trading or even long-term trading, waiting for all things to line up, your opportunities are much fewer. But when you are going, when your 60 is your largest time frame and you're going on down, it's amazing how often this does happen. I do a trading room every day from 10 to 12 Central, and almost every day we will find one of these 6 products that is moving phenomenal during that time, sometimes multiple. But that's why, because these 60s do change so much faster than some of the larger time frames. So it happens a lot more often than one would think, because you're right. In order for all these things to line up, you would think it takes a long time. The reality, it really doesn't. Not when you're trading a 60 and lower. And matter of fact, let me show. And then the second. Oh gosh, I just lost it. Oh, here it is. Okay, I just lost my chart for a moment.
No worries. I got you covered, buddy.
I got so much. I don't want to lose this. And then the other thing that you asked, which is really cool, and this is going to be high level. This is your audience is brilliant, so I'm going to give them a lot of credit here. Let me pull a product up here that just makes sense. I want to show them exactly how I do this. Here's an example. So I've got, and Merlin, it's funny, I never would have thought I would have been one to create indicators. I learned to trade, I've been trading, I've been instructing, as you said, like yourself, for years, and I never thought I was going to create an indicator, and now I actually have 2, and I couldn't be more proud of them, and I couldn't use them more. But this little pink dot up here, this is an indicator that that I customize. It's proprietary kind of to how I trade and what I do and what my students do. But what this does is, when we have a blend of stochastic and RSI, I've taken 2 indicators and I've blended them together. So when they both become, either negative or positive, and in this example negative, we get a little pink dot on there. So, you mentioned about anticipatory, and this is high level, but this is really interesting. So this candle, this is a 30-minute time frame. Okay, I'm on the NQ. This is 4:30 in the morning. I just wanted to find a live example, just real quick here. So between 4 and 4:30 this morning, the stochastics and the RSI crossed both simultaneously, to the downside. So at some point between that 4 and 4:30, the trend of this 30-minute time frame was bearish. So, one could have considered entering a short during that time, and obviously it worked out very well. And then the dot goes in, and then it stays in upon the close of the candle. So to answer your question, there are times where what I'll do is it's not so, it is anticipatory, but they are technically crossed at the time of, entry. At the time the origin is formed, they are negative, with regard to the indicators. Another thing that I like to do, though, is once the candle closes, now we know that there's a bearish sentiment because the RSI and the stochastics have crossed. They've done it simultaneously. I've blended 2 indicators. I've got my pink dot. So what I'll do then is I'll put a line below the low of that, and then a horizontal line, and then I'll put a vertical line in the middle of it, and then I'll go to a smaller time frame, and then anything to the right of this line and underneath this line is considered basically bearish geographics on a chart. And if I go down to a 5 and I just look at this, for example, and again, I'm just choosing a random example, but if I go down to the 5 and I look around 4:30 in the morning, so there's the lines I did, right? So you can see all of a sudden here's your first pink dot on the 5-minute time frame, which confirmed the stochastic RSI crossover, and then you can see just the multiple moves down from there. So, but again, I'm below this line, I'm to the right of this line. So had I done something sooner, that's fine, and that would be more anticipatory, like you're talking, like you mentioned earlier. If I'm waiting for the close of that, now I'm just looking to take something below and to the right of it, and that's even a little stronger, because now all of a sudden those indicators are locked, and you see it on the radar screen with the the negative number. So just kind of an example of of what I do, what I show in my room every day, and such great stuff, Merlin. You and I get a chance to get so deep with this stuff.
No, I love it. It's interesting. I can't help but to think that in looking at what you've done, and in essence, you're really starting to automate your trading a little bit. Obviously, you're still responding to the signals that those dots and your indicators giving you. Am I wrong in assuming that? It seems like you're trying to automate more and more and more of it. And if at that rate, you got these dots that tell you kind of, hey, this is what's happening in this situation, and this is a potential short opportunity. At what point do you just automate your system?
Yeah, I think that's next, Merlin. I think that's something. Yeah, really. I mean, you're right. I mean, that's something you could ultimately do next. So just as certain criteria are met, I was looking at TradingView. And I was looking at some of the indicators they have in there. And TradingView's loaded with indicators. It's a great platform as well. And I was so I've always, since I started doing this room months ago, I've been teaching this concept about this RSI stochastic blend, and I thought to myself, how cool would it be if we could actually label a candle that identifies exactly when that happens? And so gratefully, again, it certainly wasn't all me. I was able to find some people who knew know computer stuff better than I do, and they were able to help me. Here's the blue dot, by the way. So this is not a 30-minute time frame, but this is the bullish indicator. So again, this would show you that there's where that blend is. So yeah, that's probably next, Merlin. Automation is probably next.
I would have to change the colors, because my color blindness goes, all those little blue and pink dots all look the same. I need like a black and a yellow dot just to make it easy for people who can't see very well. But otherwise, I like it. I think it's, for me, I love making things as systematic as possible, although I don't believe I will ever be the type of trader who wants to have a fully automated system. For some reason, I like to do it. It's kind of like saying I want to have an automated car that just does my driving. I'm sure there's situations where I would love to have an automated car drive me everywhere, but I love driving sometimes, especially when you got a nice car, you're going four-wheeling or something. I want to be able to handle that vehicle myself. So
there's no question, and you're right, and that's one of the reasons I give this indicator out to every student who enrolls in one of my courses. I have 2 courses online, and I give this indicator to them as a result of enrolling. And the reason I require students to go through the course first is because I want them to understand exactly how to use this. Because, like you're saying, I mean, you could automate this, and actually in this example, almost every single one of them worked, But the reality is that, stochastics is, and again, if, people who are learning about stochastics, that, 20 to 80 is your number. And, the closer you can sell to 80, the better off you're going to be. And, some of I can't even find one that didn't work here, but, some of the ones, that may not have worked would be something where that stochastic is already so oversold. So there still needs to be just a tiny bit of subjectivity, and decision making to this. And that's one of the reasons that I do require students to go through courses before I give this out. But then I give this to them and I let them, this is the response or the feedback has been overwhelming, because it takes so much of the guesswork, like you and I are talking about, out of trading. It just helps us, focus on what we're trying to focus on, and being in alignment with the larger time frame trends.
Yeah. Well, and I am a fan to some extent of automation. I don't want to. I've used automated trading systems before where I've actually paid into a service, and I really had horrible results with those too. But I think if it's a system that either you design or the inner workings of the system, it can certainly help remove a lot of the emotion, a lot of the stress. And I like what Jerry was saying there. Like, obviously you can pull up a chart, and a lot of software vendors will do this. They'll pull up the ideal chart and say, see, it works all the time. And we all know that nothing works all the time. And what I like about what Jerry just said is, look, it's worked in this chart, but if it doesn't work, there's a very simple solution really for us, and that's just you exit the trade, right? And that, you have to make sure you have your stop loss in place. So if this thing doesn't work, great. I personally, as everybody knows, I will never put my full faith of a trade in an indicator, but they become great crutches, great decision support mechanisms to help you stay on the right side of the trade. Gary asked me, do I still have my Toyota truck? Yes, absolutely. I will probably have a Toyota truck until the day I die. I'm a Toyota fan. Reliability, economics, and just performance. Why you can't beat a Toyota truck. Dave says, does Jerry sell his indicator, or is it only available through his classes?
Yeah, unfortunately, I don't sell it. I mean, it's something I could consider down the line, but again, the reason I don't sell it is that I want people to, again, understand how to use it. I explain how it's formed, and then I explain how, it can be used to its optimum results. So, yeah, unfortunately, no, it is not for sale now, but I do have 2 courses online. They're both, very competitively, priced in terms of enrollment. So, not only do you get the indicator with those, but you also get, a lot of knowledge, and then also the, specifics in terms of how I use this thing to its, highest degree of probability. So
sure.
That's the best answer I can give Gary on that one.
Perfect. Harshad says to say hello. You got a couple people said hello to you. Apparently you got some students out here watching the show today. So there you go, Harshad.
Harshad loves you, man. He talks about you in the room all the time. He watches you every day. Harshad has been with me since day one. He's fantastic. He's a great trader, a great guy, and can't say enough about him. He's in the room pretty much every day. He's gone through courses with me. He's done a lot. So yeah, for him and for everybody else, yeah, I certainly mentioned I was going to be here, and I'm thankful to the people who are here with us live. And again, they'll be watching the recording, Merlin, if they're not here live, because they love you.
Cool, perfect. Hey, love it. Question from Rahman. He says, hi, as mentioned in intraday trading, over trading can be an issue unless strict setup and discipline is adhered to. Your inputs, please. So I guess, I've reflected this about my past towards these students in this session, or in here, where I said, one of my biggest challenges back in the late 90s was over trading. And let's be honest, that was a bygone era of trading, in my opinion, where we're just high-speed scalping. However, in a system like this, where you're using 1-minute time frames or 5-minute time frames, there will be the tendency to make more trades than you probably should. So I guess the question I have for you, or Ramanu has for you, is how do you deal with over trading in a situation where you're an active intraday trader, or do you have that problem?
Not anymore. Used to. And again, as you start to see results that are not what you're looking for, you start to fix that. So yeah, that's one of the most common mistakes people make, Merlin, and I certainly did in the beginning. But now I'm very detailed and very specific about the criteria that I look for before I do enter anything. And and a lot of that starts with the multiple time frame analysis. Like you and I were saying earlier, it's not all the time that these products are lined up with regard to the trend. And so the discipline is to say, and we talk about this in the room all the time. In fact, the first half hour of the room this morning, I'm like, guys, I'm looking for stuff, but there is nothing moving, so we are going to hold on because there's no reason to rush. And then sure enough, things opened up for us. But so if you follow that, if you have a strict criteria from which or by which you're looking, that has to be fulfilled before you participate, that will help you in over trading. So first of all, making sure those larger time frames are in fact all in alignment on multiple indicators, that's one. And then staying with, here's again, this is the 1-minute chart, which is obviously really small, but, and again, I just want to show an example, but just staying with, my indicator, staying with my pink dot, showing you, okay, this is where things actually did cross over, and as you do that, you can see, again, just the multiple entries that this provided, again, all of them working, but just staying with, so I guess the answer, Merlin, is just very simple. You've got to have specific criteria from which you're going to trade, and it all goes back, and we always joke about the first time you and I met, the first day I met you was walking into your trade plan class.
Yeah.
It was amazing, and it was amazing, you're amazing, but these guys, you got to have a really strict trade plan, and you've got to be able to follow it, and if you've got that in line, that will prevent you from over trading.
Yeah, I think everybody needs to understand that if you're trading on a 1-minute time frame and you're using any indicator, I don't care what it is, pick any indicator. If you're trading on a 1-minute time frame, you are more likely to get far more signals to buy or sell. So the sheer number of transactions is going to be higher because you're on a 1-minute time frame. Now, this is one of the challenges that I had early on is I was trading on a tick chart, and then I went to a 1-minute time frame, and I was making hundreds of trades per day. One of my trading buddies said, hey, quit it. You're driving yourself crazy. Why don't you go to a 5-minute time frame? It's much more relaxed. You won't get stopped out as much. You're not going to make as many trades. And I was like, but, I'm making excuses. And I tried it, and I noticed that my performance actually increased. And not to say that your performance will increase just from switching from 1 to a 5, but I did the analysis, and I saw a significant increase in performance, mainly because I wasn't churning my account and making lots of trades. So this is where someone like, we always reference Bob Dunn, because Bob Dunn will say, don't trade on anything less than a daily time frame. Well, you're going to make very few trades, right? You're only making a couple of trades a week, whereas someone who's doing a 1-minute time frame could be making hundreds of trades per week. So you have to figure out what works for you. Personally, I don't recommend anybody starting off to even look at a 1-minute time frame, because you'll be drawn into it and feel like you have to trade that 1-minute time frame. Start on the 15 or an hourly and go a little bit slower, maybe even just start on the daily, and then as you get more comfortable. Because remember, if you're trading those smaller time frames, things are moving faster, a lot faster. So your execution skills got to be quicker. Your ability to make decisions has to be rock solid, and most newbies don't have that. No offense to anybody who's just starting out, but most of the time you barely even figure out how your platform works, and here you are now trying to day trade off 1-minute time frames with all kinds of indicators. Good luck. You're probably going to hurt yourself in the long run. So I would say start on a bigger time frame and then figure out how your mental capacity, your understanding of markets will tailor shorter time frames to you. That was a long-winded answer.
Yeah, hey, that's a great answer to them. I think it makes a ton of sense, and I couldn't agree more. When I started doing my room, I was spending a lot of time on the 1 and the 3, and then I realized, again, like you said, we have so many new students, and I certainly didn't start on the 5, nor would I start on the 5 at this point. I'm sorry, on the 1. But with regard to, I'm sorry, I lost my train of thought there. Yeah,
it will happen. Well, just the bigger time frames. I mean, you started. So when you first started, let me ask you this: when you first started, what charts were you using? Were you pushed by whoever taught you, or your school you went to, or whatever, to use a specific set of time frames?
Yeah, they would offer a certain amount, and then I would go with that. So I kind of evolved into the 1 because of the less risk involved in it. So I started out with probably the 1, 3, 5. The problem with the 5 at the time was because the risk was too great. Like if you even on the chart that I have on here, I have my chart still up, right, Merlin?
Yep, you do.
Yeah. So if looking at this 5-minute, this is a trade from this morning, and this is the 10:30 candle. This is on crude oil. This is on CL. So you're looking at you're looking at about 60 cents of risk there, which again, that's $600 on one contract. It's $10 per penny on crude, and so there was just too much risk on the 5. So I wanted to go down to something smaller to where I could limit risk, and obviously a smaller candle carries less risk. So, but now with the invention of the micros, crude oil last July, and then all of the equities now, all of these futures products have micros to them. Now all of a sudden, $600 becomes $60. It's 1/10 the value. Right. So, I could trade the micro CL. All of a sudden, not only have $60 of risk, now all of a sudden maybe I could do 2 contracts. Still only have $120 of risk, lock profits in here at 1-to-1, lock them in again at 2-to-1, and have a really nice trade while still being, responsible with your trade management. So, and then also trading the 5, what I was going to say, because you were right on with what you were mentioning about order execution, is that, again, yeah, as a new trader, you might see things happening on the 1, but your ability to actually execute those trades on a 1 is very, very challenging, because you're still learning the platform, you're still learning how to do order entry. So, 5, 15, starting with something like that will give you more time to actually react and prepare your trades the way that, you want them to be prepared. So, great stuff, Merlin.
Love it. Good. Let's talk about, I guess, current markets. Why not just splash on some current things out there? I got your chart up here so you can kind of walk us through. There have been so many questions about these current markets moving to the upside and bullishness coming back in. Take a peek on your screen there just so we can view it. Your S&P. Kind of curious what you think on the S&P here. We've recently came into some overhead supply on the S&P 500. And, just like to get your perspective on it. I mean, look at that chart right there. Is screaming upside. Of course, when you look at the bigger time frame, it doesn't scream anymore.
Exactly. No, we're definitely in a consolidation period, like you said. And if we go to the left, like you were mentioning, let me clean this one line up. But so if we're right in here, there's the close price from today. You're exactly right. Yeah, we came right into the origin of a really strong move away, and that's where it's basing. So, But up to this point, like you said, yeah, we had, here's a moving average line. We had a nice move to the upside. My indicator came in here, so this has actually almost achieved a 1-to-1 off of this daily time frame. But yeah, it's definitely running into some supply. So what I would look for, Merlin, is to be able to clear this zone a little bit. And once we're able to do that, we may continue in the upside. But as an intraday trader, as you know, you and I don't have to concern ourselves too much with it as long as it's moving. But yeah, we are definitely at a strong supply zone here, and we would need to break above that in order for this market to continue to move.
Yeah, and the reason I bring it up is because you look at this chart right here, and this is the daily. I mean, it looks good right now. You're trending up. You're making higher highs, higher lows. Although we're hitting that high from June right now. But if you zoom out a little bit, and add a little more data to this chart, you're now basically a pullback, a retracement in an intermediate downtrend, right?
Great point. Yeah,
so I just curious. It got even further because if you go all the way back into December of last year, I mean, that's a gorgeous looking trend. We've been low. So, it's one of those things where you could make the argument that we're bullish. You can make the argument that we're bearish. And I guess bottom line is, where does, where do you put your money? And at this point, just so everybody knows, I am short on the S&P and NASDAQ. I am long on Tesla, but I am very happy to admit that I'm wrong if the markets tell me I'm wrong and get out.
As any good trader would say, right, Merlin? That's awesome.
Yep.
Okay, so you do have you're looking at some longer term pieces here, huh?
Yeah, I have October and November puts on the market. Just thinking that, we're coming back in retracement and a downtrend, even though you've got your moving averages there curling to the upside. It's a shorter term moving average. I'm not too concerned with that. Right. But, I'm also not making this a day trade, right? This is not planned on being a day trade. And the trade I'm in with Tesla, I'm basically playing it till the 24th of August when they do their split. So we'll have to wait and see. And by the way, you may not have watched the show yesterday, but Tesla announced last Thursday they're going to do a 3-for-1 split. And historically, I've seen the vast majority of the time, once a split is declared, there is a rally, significant rally into that split announcement. So I bought, what did I buy today? I think I bought the October calls, maybe November calls, and we'll see how it pays out. But so far, it's working out pretty good. I'm going the opposite direction.
Well, actually, it's so first of all, it's so funny you say that because when I first started speaking years ago, I used to talk about stock splits, and it's funny how things don't change. Exactly what I used to say or we used to teach is exactly what you just said. And again, like you said, nothing's 100%, but oftentimes once a split is announced, it's the weeks leading up to the actual split where you do see price go up. So it's really funny to hear you say that. And what I'm looking at as you're saying that is, I'm going to fib this off. So that's my new indicator, the blue dot right there. That's when the stochastics and outside blended to the positive. So we've got our indicator. But that move down today, look where it came back to, right into the origin of that move it's already achieved 2-to-1 right there based on the fib. So yeah, no, you again, who knows, right? But you certainly may have positioned yourself very well. We're still located above the moving average.
Yep.
This is a retest on the daily time frame that is not only coming back into the origin of a move here with a blended RSI stochastic indicator, which is there, but then you also have a consecutive up dot, which is showing you this is the origin of a new trend, and you're above the moving average. So yeah, that Tesla one looks pretty interesting, and with news like that coming out, we'll be keeping an eye on this in my room as well. This is awesome stuff.
Well, especially with the split. The split piece is just an interesting psychological phenomenon that people think they're going to make a lot more money just by owning the split. So curious to see what happens there. Jerry, tell me, so you've, obviously years ago, you taught for Online Trading Academy, you taught for TradeStation, or Teach Me to Trade, right? Or You Can Trade.
You Can Trade, right.
You Can Trade. Now you've got your own school, right?
I do. It's my own site. I kind of, what I was doing with You Can Trade was something that was really working. I'm doing a live daily trading room from 10 o'clock to 12 o'clock Central where people come in and be with me live in the markets. I'm offering one-on-one coaching where it's an hour-long Zoom session. They can share their screen, I can share my screen, we can cover whatever people want to cover. And then I have 2 courses out there that, I did, almost several months ago. But I've got an intro to trading futures, which if you want to learn about the futures market, I teach you about the futures market. It's all on demand, so you can enroll in it and it's yours for life. And then I have a swing trading course, which talks about using the indicators we use in intraday trading, but then using them on larger time frames. And then I incorporated, as you know, I did about 6.5 years of options trading, or instructing internationally. And so I threw some of that knowledge into that swing trading course. So if one wanted to, like you're looking at that Tesla trade, or we were looking at the S&P, if one wanted to be able to participate in some of those larger moves, not only using the future, but maybe using options, call options, put options, and therefore not, messing with their day trading margin, I offer them that knowledge in that swing trading course. So yeah, it's kind of threefold. It's been really working well. I've got a really nice, grateful to have a really great group of students in the room. It's filling up more all the time. So people now can enroll, get involved in that day trading room if they choose. Those rooms are recorded, by the way. So I do it live every day, but then they're also recorded, and I throw them up on the website so people, if they're working, they can go back and watch it later.
Nice.
And then the coaching and the courses. So yeah, so it's a lot of fun. I mean, you'll show the site in a minute, but
it's been up there. It's been up there, but I got one question, or maybe a complaint about it. You're gonna hate me for this one.
What do you have?
Pacific Shores Trading. Dude, you're in Chicago. That's well, you can't claim to be Pacific. You're in Chicago. Why don't you call it Windy City Trading? Don't steal our thunder.
It's awesome, really. Cali's been like a second home to me, man. With as much time as I've spent in Cali over the last several years, man, it's been like a second home. So that's one of the reasons that, and if I wasn't in Chicago, I'd be there. So that's one of the reasons I did name it that, and it just, it has a cool feel to it. So I really like that name.
I just gotta ask, are you setting up for a move? Because honestly, come on, Chicago, you got more gun violence than anything I've ever seen out there. You got 3 months of nice weather. The rest, you can't even leave your house because you're gonna turn into an ice block. Come out to California, man.
It's amazing out there, isn't it, Merlin? It really is. It's certainly a great part of the country to be most months of the year, if not all. So yeah, certainly love it out there.
Most months. All right, Jerry. Well, hey, thank you so much for coming on today. I appreciate it. Good to get your thoughts on multiple time frame analysis. Always good to see your perspectives on a wide variety of different topics. So, and thank you for sharing that with us. And also, congrats on Pacific Shores Trading. I'll leave that page up here for everybody. If you're interested, you can copy it out there. Pacific Shores Trading. It's got coaching and live trading and testimonials and all that stuff at the website. So check that one out. Jerry, thank you so much, my friend. Hope you have a fantastic remainder of your day, and I will talk to you soon.
Merlin, thanks again for everything. You're the best. See you soon.
All right, take care.
All right, thanks. Bye.
Guys, that was Jerry Baldwin, Pacific Shores Trading. Hope you guys like that. I think it's always interesting to look at different things and multiple time frame analysis. It snows there, right, Randall? Yeah, yuck. See, Doug, it says you always look like a surfer dude. He is. He's a beach bum, man. That's why I had to give him a hard time. I'm kind of just waiting for the day where he finally admits and says, you know what, I'm moving out to California because it's what I want. I want sunshine. All right, so thank you, Jerry, for that one. Hope you guys learned some stuff along the way there. Carl, thank you for your question about time frames. Hopefully that answered it. I'm not sure if it actually did, so let me paraphrase everything from Carl. He says, do you need to look at 2, 3, 10? Look, you don't need to look at anything. I guess you would need to look at least one chart if you're doing technical analysis. But I think the point that Jerry was making there, and also I echo this, it's one of the cornerstones of my technical analysis philosophy, is that you can't look at just one time frame. I don't care what type of trader you are. So for example, if you look at someone like a Bob Dunn who's like, oh, it's daily and weekly. Okay, that's great, but at least he's now looking at 2 time frames. He might even throw monthly on there, but he's looking at much bigger, grandiose time frames because generally when you look at the daily, the weekly, the monthly, that's where you get these huge moves, right? Especially if you get on an early trend. However, a lot of people don't have the patience to wait that long. So someone like Jerry might start on the daily and look at the 60, the 30, the 15, the 5, the 1, and you're probably asking yourself, well, why do I need to look at the 60, 50, 30, all these different time frames? Because if you look at a can of Coca-Cola, for example, and I ask you what are the ingredients, you'll never know the ingredients unless you spin the can to get to that point you can actually read the ingredient column. And I think stocks are the same way, futures are the same way, Forex is the same way, whereas you need to look at it from different perspectives to see, is it strong at this moment, and maybe it's been weaker for the last couple hours, or has it been weak for the past couple days and now is showing strength? So we can start to see maybe potential trend changes, which is what I was asking Jerry about earlier, with being anticipatory with his time frames. So personally, I like to look at 4. 4 is kind of my minimum. I like looking at multiple time frames. I think when we look at the current status of the market, the Russell 2000 is a good example. On the daily time frame, aggressive downtrend. You get to the hourly, it's been on a monster uptrend. Well, what's stronger, the daily or the hourly? In my opinion, it's the daily. Daily wins. So I'll give you an example. Let's go here and look at that. Look at the Russell or S&P. Hell, I mean, we could stop right here and look at the S&P. It's been on this aggressive downtrend since back in December, right? Lower lows, lower highs. It feels like it's still intact. So, you know, I could look at the shorter time frame over the last few days, and it ran smack in overhead supply. I'm still respecting the daily above the shorter time frames. Here's your Russell, right? Notice the Russell. I've had this yellow line drawn for weeks now, guys. It's not like I made this one up. This yellow box has been there. I've been saying this has been the target, and notice what we did today. We hit it. I did not go short yesterday, which I was a little upset about, but I just didn't want to have too much risk exposure. But all of a sudden, today, fell apart. Well, if I looked at the hourly, and I removed today's trading, right, let's remove today's trading, you're going long. Why? Because it's just been trending up. However, you look at that yellow box was quickly approaching. I may be thinking about going short at that yellow box. And in this case, not only did it hit, but it worked out on the hourly. So once it starts to turn, then I can maybe refine and go to a smaller time frame. But I personally think you always got to respect that bigger time frame picture. Bigger time frame, to me, wins the fight. It's like the bigger kid's generally going to win the fight. In this case, the daily is the bigger kid in the room. So Carl, hopefully that helped you. Look at multiple time frames. It doesn't have to be, 10 different time frames, but make sure you look at multiple, just to look at different faces of that animal. All right, Doug, since he's here, and I got a couple minutes left, he says, what's the difference between public keys and private keys as it relates to a seed phrase? So we're kind of complex here, but a seed phrase is simply a cryptographic mechanism. And what it does is with those 24 words, you put that into the encryption protocol, and it will basically spit out it allows you access to a lot of public keys and private keys. It gives you access to both. So it'll say, okay, you have access to this public address, and here's the private key. This address, here's the private key. This address, here's the private key. So it has a whole bunch of predefined private keys and public assigned together. So you said here, I have only moved from my Coinbase account to my ledger, and I think it was via public keys. Correct. When you're moving things around, you're pretty much just putting in your public key. So if you send me crypto, you would only put in your public key. Now, your software that you're using to send that cryptocurrency, that would put in the private key, but you wouldn't ever manually put in your private key. So for example, if you're at Coinbase and you send Coinbase to your ledger, you're just going to use your public address saying, here's where I want the money to go. Since Coinbase controls the private keys, that gets input as a verifier, right? So when you send it, the network will say, okay, Coinbase has the private key. It's fine to send. They've validated the private key. If I do the opposite, send from my ledger to Coinbase or whatever, do I need my PIN, seed phrase, etc.? When you're on your ledger, remember that all the private keys are inside your ledger, essentially. So what ends up happening is if you sent from your ledger to me, or ledger back to Coinbase, or from your ledger to any other device, all you would have to do was put in your public key where you want it to go to. Say, I'm sending my Bitcoin from this ledger back to Coinbase. And once you go to your device and confirm, when you confirm, that device will automatically send the private key out. You'll never input it, but you just click OK, and it will automatically send your private key, which verifies that you own that. So that's how that would work. That's all you need to do. It's actually very simple. Basically, how does my private key relate to my seed phrase? Your seed phrase creates a set of addresses, public, and their corresponding private keys. There you go. Should I be concerned that I don't know some arcane alphanumeric, but maybe resides behind my seed phrase? Long question. All you need to make sure you understand is your seed phrase gives you access to all of your addresses on your ledger. All of them. So that's the most important thing. You don't need to remember your private key if you're using a ledger. Now, if I have a paper wallet or a specific address, then I might need to memorize my private keys. But because the ledger, the way that it's built, uses that seed phrase technology to access almost like a database of public keys and private keys. It's not a database. It's not like someone is storing this database. But when you run your seed phrase through an encryption, it will automatically say, okay, this accesses all these accounts. That's how simple it is. Hopefully that helped there, Doug. Let's see. All right, I'm going to keep this one. The gentleman that sent this to me said, do not share this on the program. But I'm going to share it. I'm removing I don't want anything to do with his name, but I really want to address this because I think that this is a problem that can happen to a lot of people. So it was a very personal one. I'm sure there was some pain there. It says, right now I'm losing 80% of my account. Even though you gave us signals, I did not follow you, and if I did, I would make a decent money. First off, let's stop right there. I am not telling you guys what to do. I'm not telling you to make trades. I'm not telling you to buy something. I'm not telling you to sell something. I'm telling you pretty much how I'm viewing the market, and if I make trades, I will tell you what trades I make. If you make trades off of things that I say, that's on you. You have to have your stop loss in place. And usually when I'm telling you things I'm in, I'll tell you the stop loss. It's unfortunate you lost 80%, but, I don't want you to think that if you follow my Tesla trade that I'm in, that you're all of a sudden going to make great money. You might not. You might lose, right? Right now it's up, but these trades could go against us. So I don't want you to put all faith like I'm some great oracle that's going to be nothing but winning. I'm going to have losing trades along the way. So let me continue on here. Can you give me some signals for huge up or downs, if that's possible? Because I lost a lot. I need to try to catch up and more. What you're doing, Anonymous, is you're basically looking at revenge trading. This, in my opinion, could blow your account. You lost 80%, which means you got 20% of your account left. If you revenge trade, which means you get emotional and you feel like you have to trade bigger, you have to trade more aggressively, I have to have bigger winning trades to get my money back, I can almost guarantee you're going to lose all your money. I hate to say it. I'm just being brutally honest because I've seen it happen over and over again. Right now, from your comment, it sounds like you're trading with scared money. You're afraid because you lost 80%. What you need to do, I would say, stop trading for a moment. Take a week off. Go back and ask yourself, do I have a trading plan? What are my rules? Right? How much am I willing to lose per trade, per day, per month? What asset classes do I trade the best? What markets do I trade the best? Which securities do I trade the best? What time do I trade the best? If you answer all of those things, then go back to start trading, knowing your plan, and follow your rules. If you don't know any of that, then you shouldn't trade again until you do, because clearly you're losing doing something wrong. And I don't know, I just judging by what you wrote me here, I don't feel like you've looked back at your trades and said, this is what I'm doing wrong. This is the problem. If you don't know that, you're going to lose all that money, man. And I don't want to see you lose the remainder of your 20. If you think that you need to have bigger winning trades, then you're a gambler. Don't do that. You got to go back to your remaining 20% and say, hey, I'm going to go back and all I'm going to do is try to trade the best I can. If I start with a couple small winners, great. Right now, you're damaged goods. You are psychologically destroyed because you lost 80% of your account. I can't speak for you, but I know what you're going through. At this point, you probably feel like a loser. You actually literally wrote it on the screen here. You said, I'm stupid. No, you're not stupid. You're probably a very intelligent person. What you are is a poor risk manager because you most likely let things get away from you. So number one, focus on your risk management. Number two, focus on making good trades. Do not follow these morons on Wall Street Bets or Reddit chat rooms that are telling you you're going to make 10 to 1 or 100 to 1 or 1,000 to 1 risk reward per trade. Don't follow these idiots that are out there saying, hey, let's go buy HKD. Do you guys remember what I said? I said this back when HKD was $1,600. I said by the end of this month, by September 1st, it's going to be below 100. It's already at 200. These are idiot traders. Don't follow them. These guys will destroy you. Don't follow the AMC group because that's pump and dump. Don't follow the GME group. That's pump and dump. Follow the ones that are consistent, the ones that move, and you have a better probability of anticipating where markets are going to go. I apologize, Anonymous. I definitely did not want to. I didn't put your name out here, but if you're in this and you're watching this right now, it's critical that you stop trading. Otherwise, you're just going to continue to donate your money. If you know why you've lost, then learn from it. Revise your trading plan. If you don't know why you've lost, then you got to stop, or you're going to lose the rest of it. It's very, very simple. Now, you put here, I need 2 to 3% movement of some signals. I like to buy put or calls. I will follow the rules. You say that, but it sounds like you haven't followed the rules in the past. What did Thomasina say? Great advice. We've all been there with stupid mistakes. The question is, are we going to learn from it or be lazy and keep doing what doesn't work? Correct. It's tough. It's a really tough situation to be in. Obviously, Anonymous wants to be successful. Who doesn't, right? We all want to be successful at this. The sad reality is the vast majority of people that get involved with trading fail. in my experience, just from looking at having done this for so long, not just as a teacher, but as a trader around the world, we're all humans. We process information pretty much the same way. It's how we deal with it, which means it's psychology. Lisa, trade spreadsheet, write notes, and track everything. Totally agree. Buy something as simple as a little binder like this, a little 3-ring, notebook from Target for $1. And every day you make trades, write it out. Why did you buy this? What were you looking at? What influenced you to buy it? What were the positive factors, negative factors? It sounds like a lot of work, and it is at the beginning. And it's important that you put in that work so you can understand who you are, how you function, and how you respond to this stuff. So, Anonymous, I really appreciate that you, took the courage to send it in, but don't think that, by watching this program that, we're calling out trades that are going to be, 5, 10, 50 to 1 winners. Look, I think most people here know that when I'm making a trade, my goal is just to get a base hit. I'm just trying to get to first base. I want a small little winner because the only way I can get that 100 to 1 winner is if it starts really small. Got to start small, and then I have to learn how to manage my trade. And now if I can let that get to second base and maybe get to third and maybe get to home, boom, now we're soaring. But that's not my goal. I'll never, let me take that back. It's not to say never. I would say the S&P trade that I entered in 2020 with 420 puts, that was thinking of the Grand Slam. I got a little bit ahead of myself and got a little bit too big there, but I thought I was right, and I had a stop loss in place, and I still lost, for over $60,000 on that one. That was a rough trade. However, I would say the 99.9% of the time, I'm not thinking about hitting a Grand Slam. Just start off with a small little winner, right? Small, tiny little winner. Like right now, I was not opening up that Tesla trade today thinking I'm going to have a Grand Slam. I wanted to get to first base, give me a nice little hit. Well, today, just in the couple hours I was in that trade, we're up about 9% on that trade. Great for one day's trading. Now, if this does do what I think it's going to do, then that could be a much more significant gain, but I'm just planning day by day, and I'll be trail stopping this one up so I don't get stopped out. Take Matthew McConaughey's advice on trading from Wall Street on how to relax before it was. Yeah. What? I forgot the whole the chant thing. Is that what you're talking about, Daniel? That was a good one. Let's see, Drew. Glad I started young to learn early because everyone runs into that problem. Yep, everybody does. Been there, Anonymous. I had to learn and get out of losers sooner. It's tough. Hang in there. Yeah, and probably what happened with Anonymous, if he was much more candid and sent me in more details, my guess is he held on to things too long. Trading with really volatile, sensational stocks like that HKD or, GME when it was flying because of the short squeeze, or what was it, Bed Bath & Beyond yesterday, BBBY. Here's Bed Bath & Beyond yesterday. Oh my God, look at, you guys love my shooting star pattern, right? Talk about a perfect one today. It opened up above that line, boom, would have been a nice trade all day, but anyway, shoulda, coulda, wouldas don't fly. You just gotta fly away from a lot of this garbage out here. Okay, let me see. Dave says, I blew out my futures account doing the same thing a few years ago. I went back to OTA, retook core strategy, saw my mistake, and haven't made it again. Awesome, Dave. That is great to hear. And that's really why they all built that company, is saying we know that people are going to make mistakes. Even after good education, you're going to make mistakes. Go back and retake those classes from different instructors so you hear different perspectives, different stories, but the foundation of money management and risk management is the same across all instructors. It is pretty awesome. What you think of Microsoft long for NJ? You don't try to get me to do an hour show, MJ. Don't try to get me to do an hour show. Let's see, MSFT. What do I think of Microsoft long? Well, I think that we are still in a downtrend technically on Microsoft. We could run through these highs. Now, it's not going to be the most perfect looking. I will modify this to fit here. You go from there. You can run through here. I still think we're at in a downtrending type of market. Personally, I probably would stay out of Microsoft until we got above this level here, which is right around 290. I just need to let it prove. I think that there's still a lot of overwhelming pressure in the market going forward, and that could bring Microsoft down. You're right near a trend line, so I actually think maybe shorting Microsoft at this point was probably the most appropriate thing to do, but I don't see any great trade set up here. So there you go, NJ. And there was one more earlier. Somebody asked me about a specific stock. Let me go back there. Oh, Joe Frank. Yeah, and on that note, let's talk about that. He says, big day tomorrow with CPI. Given the market is showing weakness, if inflation creeps up higher, is it reasonable to expect the indexes to continue at the downside or do the opposite? Well, here's what's happening for tomorrow. There it is, up at the top. I'm lost it for a second. At 1 hour before the market's open tomorrow, you can see here 5:30 in the morning Pacific time, CPI numbers come out. Look at the expectation. dropping from 1.3 to 0.2. That's a significant decline, but remember, we've seen commodity prices collapse recently, so we may actually get to those numbers. Now, what does it mean for the markets? I think is Joe's comment here. You know, what do we expect to happen? Be honest, hell if I know, Joe. Hell if I know. You know, if we come out at 0.2%, that means that inflation has declined significantly. That means the Fed does not need to raise rates as aggressively as they do, and the market will probably surge. So if we come out at 0.2, anywhere near 0.2, I think the market's going to have a pretty big rally tomorrow, which is why I got to be careful because I am short the indexes and I'm long Tesla. The good news is the way Tesla moves, that will probably offset my my put options. But yeah, I don't know. I don't know how it's gonna act. I mean, this is a pretty big decline they're expecting. It's an over 1.1% slide versus the previous month. So that is the huge news coming out for tomorrow. You also have crude oil inventories and wholesale inventories for the U.S. And then earnings calendar, you've got Disney and CyberArk Software. NIO and Honda are both international companies, so they're expected to report tomorrow, but we don't have any definitive answer on if they are reporting tomorrow. That's just the expectation that's coming out. All right, cool. Well, thanks everybody. I hope you guys enjoyed that session with Jerry Baldwin today. And Anonymous, thank you for the question. I think it was important to share that with people, not just share it with me, but we left your name out, so there's no personal attack there. Know that the comments that were made, not only by myself, but also from the viewers today, were more of support, right? My comment might have been tough love in saying that, you know, I don't think you have your plan in place. I don't think you're following your rules. If you did, you wouldn't be down 80%. So, you know, read through some of the comments. Some of the people here suffered through the same thing as you and found ways out of it. It's, in my opinion, it's not that difficult to find a way out of those types of situations. A, you have to want to, and B, you have to have a plan in place to get there. It's like in life. If you want to do anything in life, it's easier if you have a plan in place and use resources to help you get there. All right, oil report come out tomorrow. Will inflation impact that? Yeah, maybe. I mean, look, George, who knows what the hell is going on with the crude oil inventories report anyway. As you can see, the expectations swing wildly on a daily basis or a weekly basis with this one. Look, previous month we had a 4.5 million barrel surplus. Now they're saying only 0.1 million. I mean, that's a 4.4 million barrel slide. Who knows what this number is going to come out at? I don't really trade this at all. I do think it's more of a psychological impact for the markets going forward. All right, everybody, I got to wrap up simply because I'm not going to do another hour show. So that will do it for today. Again, if you have comments, questions, feedback, put them down below the YouTube video so I can get those included on tomorrow's show. You just put them down below any YouTube video, and I will put those questions into the slides for tomorrow's session. If you have something specific you want me to address or talk about, of course, we'll talk about the CPI data that will have come out in the morning. Let me know. Just put it down below the YouTube video, or you can email me at TraderMerlin@gmail.com. That's it. Have a fantastic remainder of your day, everybody. I will see you mañana. Take care.